Hello, this is John Lame, and we're here in August. We've had some of the best weather I ever remember in Cincinnati this time of year. And today we're having a special broadcast. And it's directed towards the P&G community because we think that these are unusual times with the proxy fight. And we want to make sure that people are really beginning to think through, why is there a proxy fight, and what might this mean for me and my family? So with that said, I am the Chief Executive Officer of Lenox. I've been here since about 2004, and I helped rebuild the old Lenox Savings and Loan into a family office. And today, what I would like to cover is why it's so important now more than any time I can imagine for someone working for P&G to have a really clear career plan and a financial plan to support it. I want to talk a little bit about the history of Lenox. I want to make sure everybody on today's presentation understands what a family office is and why it's such an advantage for someone to work with a family office. I do want to talk about P&G Stock Performance. I want to talk about Trian so people know what an activist investor is and who Trian is. The next thing I want to talk about is the board fight that we have going on right now. And then finally I want to wrap up with what do we think the outcome is most likely to be. Okay, so let's start with the big why. Over the next 10 years, we believe we're going to see significant structural changes in all the S&P 500 companies, not just P&G. And if you want more information on this, there's a website out there called Singularity University, and it does a really, really good job of laying out the technology that's coming and how it's going to impact our larger companies. And the core theory that they lay out is that a third of the S&P 500 companies will be broken up and gone in 10 years, and of the remaining 2/3, the headcount will be reduced by 50%. And the way to think about this is if scale is not an advantage, then there's a good chance that those jobs will come out. Or if the scale specific to a company like Procter is not an advantage, and you're better off having the resources outside so that employees can work with multiple S&P 500 companies. Those are examples of jobs that probably will not remain inside P&G. Okay, so how do we think about this? The key question for anyone working at P&G today is, will P&G be broken up? And if so, when? And then finally, if it doesn't break up, if the scale that Procter has is required for the success of the brands that we have, how and when will they reduce the headcount by 50%? And we're not saying these are absolutes, but we're saying they're really good starting points for anybody asking questions about their short, medium, and long-term relationship with the company. So let's continue with the big why. And I have all the respect in the world for John Mueller. I have all the respect in the world for senior management. But the bottom line is John's had a tough job because the numbers don't lie. When you go in and you look, P&G as a whole has not added enough value for consumers. And the best way we can see that is to look at revenue growth and market share growth and make comparisons between Procter Gamble and its major competitors. The other thing that we know is P&G has not added enough value for shareholders, and it's really evidenced by the poor returns when we look back on a 1-year basis, a 3-year basis, a 5-year basis, and a 10-year basis. The next metric that we go in and look at is we know that the company delivered a $10 billion cost savings program, but when we go in and ask the question, how much of it dropped to the bottom line? How much of it added market share back to the brands that we have? It's not there. And so in turn, it leads everyone to ask the next question, which is if you deliver another $10 billion program, will it really make a difference? So when does an activist investor group like Trian show up? And it's interesting. For those of you who follow our P&G Outlook, we forecasted 2 years ago, you know, as we watched Ackman leave the scene, that there was a high probability another activist investor group would show up. And as we looked at the field of who could show up, Trian was one of the companies or investments advisors. But we also would tell you that Trian's got a good track record, that they've got a history of doing this and doing it well. And they tend to show up when boards are really not being aggressive and active enough on behalf of the shareholders. They do it when they see potential for significant returns over the next 3 to 4 years. It's not unusual for them to let some of the heavy lifting get done and then show up towards the end so that they can capture that upside benefit. And it really probably doesn't matter whether Trian successfully gets a board seat or not. The end result is more change is coming for all the S&P 500 companies, more changes coming for Procter, and it's going to come faster. And the challenge is, in a slower, bigger company, how does it keep up? And so in turn, our belief is that job security for many of the employees at Procter and for many of the people in the Cincinnati community is just going to change. And so the key question is, how much change and how fast? I want to talk about something called the comfort zone and the safety zone. And I don't know if anybody, you know, listening to the broadcast today is familiar with Seth Godin. If you're not, wonderful writer, wonderful speaker. There's some great books out there on audiobooks, and I would really encourage anybody from the P&G community to listen to the book Linchpin. But one of the things that he really goes after, and it's appropriate for the S&P 500 employees, is there an overlap between comfort zone and safety zone like we've always seen in the past? And the argument is no. For the first time, we're beginning to see that the comfort zone and the safety zone are not the same, and that if people don't really get thoughtful and think about their options and get out ahead of it, that what they think of as the safety zone may not end up being the safety zone at all. And so with this in mind, it's our opinion, people need career advice, and you need a financial plan to go with it. And it may not be the safest and best route to do that internally inside Procter as you've done in the past, and this is where independent advice can really help. The other thing that I want to emphasize is when you think of picking up the phone and contacting a bank or a brokerage firm, I just have to go and be very direct about this. They're in the business of selling financial products. They may give advice, what they call incidental to the sale of an investment product, but it is not their core. And so this is where it's really important to call the right person to get advice. So with that said, this stage is an opportunity for me to talk about the history of Lenox and what a family office is. So we were founded in 1887 by William Cooper Procter, and Lenox has served the Procter & Gamble community ever since. We were originally founded as a savings and loan, and they needed a place to distribute the dividends from P&G's profit-sharing plan. And so Lenox was set up at the same time the first profit-sharing plan for the company was set up. And finally, in 2004, Lenox sold the savings and loan and relaunched as a family office. And if you said, why did you do that? I was on the board at that time, and we conducted focus groups and really asked the employees, what do you need? And what we heard back is, I don't need another mortgage provider. I don't need another savings account. What I really need is better advice to supplement what I'm getting from HR. I need better advice on my investments and my financial planning, and I need a company that is independent and will act as my purchasing agent when I go get things like estate planning, when I go buy a car, when I go invest in an index, when I go hire a money manager. I need somebody to basically pull the P&G community together and get us to wholesale pricing. Think of it almost as a Costco in that particular area. So today we specialize in working with corporate employees and their families, includes Procter, it includes E.W. Scripps, Scripps Networks, and Kroger, among others. Okay, so what's this family office? The best way to think of it in P&G terms, it's a combination of finance, HR, and purchasing. My background when I was hired by Lenox to come in and start the family office is I had worked at Procter for 12 years. The whole time I was there, I always wrestled with being in finance or being in HR. Functionally, I was in finance, but I always worked closely with the HR folks, and I really loved what they did. And at the same time, when you go in and look, we have distinct HR functions that are designed to help somebody really think about, how do I add value? What are my core strengths? What are my Colby scores? What are my Myers-Briggs? How do I position myself in a career? And if I don't have a defined career path any longer with Procter, and I really need to rethink my career path and come up with that on my own, how do I do that? And then we talked about it a minute ago, there's also a major purchasing function where we will go out and negotiate with money managers and with investment firms to get the best possible pricing. And in many cases, we work with local money managers here in Cincinnati, but we get institutional pricing where if the P&G community goes on its own, they'll typically get retail pricing. So what's this concept of a fiduciary relationship? This is important. When you look at almost 90% of the people that give advice in financial services, they are what they call broker-dealers, which means that they are selling something. They are licensed by the Securities Exchange Commission to sell things, and they typically buy wholesale, mark it up, and sell it at retail, or they design and make the products themselves. And the reason that you want a fiduciary relationship is that person is required to think about you and your family and your situation first, and to not accept any compensation from anybody other than you. And that's a big, important differentiation. And so that's why you should care about who pays Lenox. Our core offerings as a firm target life transitions, and they're around wealth creation, wealth management, and wealth impact. And for many employees of P&G, there is going to be a life transition coming up. So let's go back and look at P&G stock performance. It's interesting, I recently got a letter from David Taylor, and it went in and it benchmarked P&G's performance against the S&P 500 and concluded that a lot of good things were happening. The bottom line is maybe on a short-term basis that's arguable, but if we really go back and look at Procter on a year-to-date basis, 2016, trailing 5 years, trailing 10 years, it really has underperformed. And I think that's an important thing for everyone in the P&G community to understand, that if you look back, it's been a very unusual underperformance period for the company. Now, what do we know about Trian? Well, the first thing is they bring a private equity mindset to the public markets. And we know for Procter, this is a different mindset than they typically have. They invest primarily in large companies. They typically buy at an attractive price and have very specific plans and time frames and a process in mind to significantly enhance shareholder value. They manage a very focused portfolio. They only hold 7 to 10 investments at any one time. And just to show you the conviction that they have about Procter & Gamble, it's the largest single investment that they've ever made. So how do they do it? They typically build a position and then quietly let management and the board know that they've taken that position. I know a story broke, and it broke before they had a chance to talk to the board and management. I'm sure they were embarrassed by that. It's not their typical style. And then finally, what you should know is typically only if forced are they willing to do a proxy contest to change the governance and the direction of the company. So clearly they must feel that they've been backdoored into this, or they would not be pursuing a proxy contest. And they typically bring accountability to the shareholder by both the board and senior management. One of the things that we have to understand is our own retired senior management may actually have gone to Trian and asked for help. They may feel like the company's underperformed for a long time. Many of those P&G retirees have shares from profit sharing, they have stock options, and they care a lot about the stock's performance. And then finally, just to wrap up, Trian typically holds an investment between 3 to 5 years, which means that they know how to get results over that 36 to 60 month time frame. So we have a board fight right now. Nelson Peltz of Trian Partners has been backdoored into the proxy fight by P&G management and the board. Nelson has a strong track record of adding value for shareholders. We were very surprised he wasn't invited to be on the board, especially when P&G just added a new board member, and we were surprised that he was rebuffed. Trian is a very large shareholder, and they deserve board representation, even if the management team believes they already have the best plan and they don't really need the help. We do not believe that P&G's current plan really does bring a private equity mindset to the company, and we think it's really worth considering. With that said, if the board listens to Trian, if they execute some of the proposals that they may offer up, we believe that there's an additional $30 to $40 a share in value to be added to the price of the stock. On the other hand, and this is where I want to push back on Trian and on Nelson, they're saying that they're going to do it, but they're going to do it without pushing for more aggressive headcount reductions. They're going to do it without insisting on higher value-added spending on R&D and marketing, and they're going to do it without challenging the dividend where earnings are double taxed, and they're not going to push for increased purchase of shares through low-cost debt. I'm sorry, I have trouble buying that, because we know that's typically how a private equity mindset brings value. I just don't believe these are the wrong things for the company. I think they need to be considered, and they need to be considered at the board level, and the board needs to push senior management to integrate the best thinking from private equity with what we already know we do well at P&G. So our belief, when you look at the P&G board and how it's performed over the last 10 years, we do believe it needs to be shaken up, even if Procter has the right management team, even if they have the right strategic plan, and even if it already has the ability to ensure increased accountability, which some may argue has been missing. We admire David Taylor very, very much. We know many of the people that have worked for him. We know he's a very strong leader, and we think he will bring clear plans and focus to the company. But we do think the board, the management team, and the employees can be challenged to do better, and we think Trian can add that value. We believe that in order to add the value, this board needs to bring a stronger outside point of view and push when required for more transformational change. And we think this board has to face up to the fact that there's been 10 years of underperformance. Finally, and this is important, and I know this is a different mindset, many people from P&G are saying to me, they're just a small shareholder. They're not going to be able to win this proxy contest. Here's what I think is missing from the discussion. Institutional Shareholder Services acts as a third-party independent service to help institutional investors decide how to vote. And they will ask Trian and Nelson Peltz to make a presentation to them. The reality is, when they go through that presentation, the numbers are not good, and it will cause shareholder services to conclude there's an opportunity for this board to do better. P&G is currently owned by 61% institutional shareholders. If you go in and assume 80% of those institutional shareholders follow ISS's recommendation, we think this is going to be a close call. And I think that will be a surprise for the average person working at P&G. So what do you think the outcome is going to be? We believe if Trian wins, this will be good for P&G shareholders, and we do think it'll bring greater economic value in a shorter period of time. And over the last several years, P&G has frequently traded below intrinsic value. And it's been difficult to give advice to employees on when and how to exit the stock, because so often we traded below intrinsic value. We believe with Trian's involvement, the good news is P&G will more frequently trade closer to intrinsic value, which will make it a little easier for people to exit the stock and diversify when they need to. Okay, what do we think the outcomes will be? We believe Trian will bring transformational change faster. We think this will include more aggressive headcount reductions. We think it might include restructuring the balance sheet. It might include a change in the dividend policy where they leverage the balance sheet and they buy back shares, and it makes sense to do that from a tax standpoint. Finally, and we think this is probably an outlier, but the breakup of the company could and should be considered. And we believe if all those things happen, the company's price could jump to $120 to $130 a share over the next 36 to 48 months. With that said, we think individually many employees and their families will be facing some bigger decisions. How do I think about my job security? How do I think about my family goals? How do I think about my retirement goals? How do I think about my security, especially related to healthcare? And how do I think about my financial life? We also know that we are in a period of uncertainty. The economy has stabilized a lot, but it does have the potential to be unstable again. Interest rates are a little bit different in this low interest rate environment with quantitative easing. The stock market has performed well, but it could be very volatile. The country obviously is going through a lot of political turmoil right now, and frankly the world stage is different than I can ever remember. So with that said, Lenox can help reduce the stress. When you have big decisions that have to be made and there's a lot of uncertainty, it's very natural that you have stress. The beauty of Lenox is we have a lot of well thought out, well designed processes and experience with over 250 P&G families where we've proven that we can add value during a period like this. So what's important to you right now? The first is, do you have job security? The second, do I have clear career goals? Do I have a clear career plan? Is there any chance your career goals and your plan might be met better outside P&G? And I know this could be a surprise for many people, but often it can be. Do your current career and financial plan give you the confidence you need? In many cases, you need to rethink things that you took for granted in the past. And finally, if you do need one, do you have a backup plan? And do you have the relationships in place to execute the backup plan? So this is a good time to get independent advice from a group of experts who've already worked with over 250 P&G families. We're here to help. We have a unique process called the FinLife Client Experience. We have a licensing agreement with a very unique firm out of California called United Capital. It's a 5-step process. It brings a money mind analyzer, honest conversations where we engage your spouse or significant other, a financial control scorecard, a wonderful guidebook that looks a lot like a P&G presentation, and a portal that you can go in and plan. So, what should I do next? The first thing we would suggest is just pick up the phone, make a 15-minute call. We can give you a very quick opinion on how we might help and how urgent your need for help might be. The second is, if the 15-minute call concludes that you do need help, we can schedule a quick 1-hour meeting and accomplish a lot during that 60-minute meeting with you and your significant other. And then finally, we would ask you to do us one favor. If you know someone at P&G who would benefit from our services, please tell them to listen to this video and contact us. We would love to be in a position to help them. Other ways to stay connected, we have an page. You can follow us on Facebook, and finally you can link in with us on LinkedIn. Okay, the next page here, we are registered with the SEC as a registered investment advisor, so we do have some disclaimers and disclosures that you should review. And finally, thank you for joining us. It will be a period of change for P&G and for the P&G community. We're privileged to help during a period of time like this. Thank you very much.